Hello, everyone. You're welcome to Stalker Team, the Investors Channel. Today, the 31st of March 2025. Today, I just want to also give an update on what is going on, especially on Wall Street, in the financial markets in the US. Today, we've seen further downward movement in the S&P 500, in the Nasdaq. If you are an investor and you've checked your portfolio a couple of times, you'll have seen a sea of red, and this has happened for a couple of weeks now. I'm going to actually give an update on why I believe is actually an opportunity and not actually a time to despair or to actually abandon investing. Before I go ahead, I'll just make a quick disclaimer. Every information shared on this channel is for information and education purpose only. Do your due diligence or consult your financial advisor before making any decision. And on that note, thank you so much for being part of this show, for being part of this episode. If you haven't subscribed to our channel, subscribe, put on the notification bell, and please give this video a like, because that will actually help us to share this video to much more people. Also, don't forget to follow us on X at Stalker Team Live, on TikTok we are at Stalker Team, and on Instagram we are at Stalker Team Live. So the US president has actually perhaps upped his game to escalate the trade or tariff war that he has started a couple of weeks ago, and we have seen the results showing on the stock market heavily. We have seen a huge drawdown, a pullback, major pullback. As a matter of fact, the S&P 500, the Nasdaq 100 are actually moving towards correction territory. Correction is actually when the stock market pulls back, especially the major index pulls back to a region of about 15%, which is quite significant, because if the broader index moves back to about 15%, that means some other stocks or some particular sectors must have moved back by about 20, 30, 50, 60%, depending on the risk portfolio, or the risk context of those stocks. So for instance, if you are exposed to companies in technology, if you are exposed to companies that are a bit more speculative, or those companies don't necessarily have so much asset on their balance sheet, they have a lot of debt that they are also paying, a lot of leverage on their balance sheet, you will have seen some of those stocks move back by about 60, 50, 30, 40%, and compared to the broader index, which is now nearing about 15%. Now, the major reason why I'm having this episode is to basically show that we are not necessarily in a situation where the stock market is going away, because a whole lot of people who are new to investing, maybe they came into the market or they came into investing in the last couple of months, or less than a year, and they actually think the stock market is actually a place where everything just keeps going up. Actually not. The stock market doesn't necessarily keeps going up every day. It's just that the stock market actually has a cycle, and the stock market is also very, very reactive or reactionary. Sometimes it could be very proactive. So what we're actually saying is a mixture of proactiveness and reactive reaction to what is going on with the US government, the US policy as per trade and tariff. So for me, I have watched this market for at least close to about 9 years now, and I can see with the best of my knowledge, and I'm going to show you data that you can actually use to back it up, is that the market is actually just not necessarily going to be this way. It's actually going to correct itself, and when there's more clarity, when there's less unpredictability as to how the tariff is going to play, or what is going to happen to the balance sheet or the businesses of companies that are going to be at risk, to this retaliatory tariff, by the US and other countries that are also trying to counter the US, the market will now more or less pick its pace. However, if you want to actually be an investor, you need to actually be an investor. So it's like a struggle. You need to actually pick a struggle, because if you want to be a speculator or maybe a trader, if you may say so, that's also another struggle within the market. So if you are an investor, this is actually the best time for you to invest, because I keep saying it now. The best time to invest is not when the market is actually going up. If you remember what happened with the 2020 COVID pandemic, the entire market crashed, close to about 30%. And that's even more than double of what we have now in terms of pullback. And what happened? As soon as the market factored in everything, as soon as the key authorities, the government, the health institutions, the WHO and every institution started, managing the situation as per COVID, spread, vaccination and all that. What happened? The market went back, retraced all the losses, and reached all-time highs. So for me, this is actually the best time to buy, and I'm going to just show the chart of the day for us to actually contextualize it. Now, if you don't have anything to buy with, maybe you don't have cash or liquidity, it's also the best time not to do anything. As a matter of fact, not doing anything in the market when you're already set, when you already have a strategy, is actually perhaps the best strategy, because even if you want to buy, if you don't know what you're buying and why you're buying, also you could actually even get yourself into more trouble, because some of these stocks that are not really strong, even when the market was very good, some of them might have even retraced a whole lot of gains. And if you go into some of those stocks, when the market comes back, some of them might not actually necessarily recover to what you actually want to see as an investor for you to actually make your profit. So let's go to our chart and we'll close on that note to actually bring this point home. So this is the S&P 500 index. For some of us who actually are not really aware of what the S&P 500 is the actual barometer or the index that is used to measure the health, the vitality, or the strength or the performance of the US stock market. It consists of the top 500 companies, that are quoted in the US stock market. And you can actually see that in the last 5 years, the index, over 120% return. The Nasdaq 100, which is the tech heavy or the tech focused index, has done over 153%. However, if you actually look at this chart very well, you could actually see that despite the fact that we had pullbacks in between, there were times of correction. There were times of geopolitical tensions that have actually caused the market to react very sharply. And an example of that was in 2022, when we had the invasion of Ukraine. Around this period, we had that invasion of Ukraine, and you could actually see that the market pulled back sharply. Both the S&P 500, the Nasdaq 100 pulled back heavily. And why did this market pull back? Because a whole lot of companies had to leave Russia. Russia was actually more or less delisted from the entire quote unquote global financial markets. And as a result of the increase in energy prices that actually hammered a whole lot of people, especially in Europe, and also inflation across Africa, across different parts of Asia, and even in the US, a whole lot of companies found it very hard to actually borrow money, which actually increased the cost of goods and services, increased the cost of production, and also cost of labor. A whole lot of things became very expensive. So even at that time as well, we also had in 2023 some pullbacks here and there when we had further escalation. We remember in 2024, around this time, there was the Japan carry trade that happened. Some of our viewers might have even watched some of the episode where I talked about this. So in essence, what am I trying to say? If you want to be an investor, it is not when the market is necessarily performing very well that you actually buy. Yes, you should buy over time. You shouldn't time the market. But if you have this opportunity, it's not the time to actually sell for loss and give up investing. Yes, you have the right to give up investing if you want to, but this is the market, this is the financial market, this is the reality. But as soon as the clarity and the market price in properly the risk of the uncertainty that Trump's presidency has brought to the financial markets, as soon as everything is properly priced in, this market is actually pricing itself for a major bull run. If you look at the all-time highs of the market, you could actually see. In fact, if I take out the Nasdaq 100 and just feature the S&P 500, you could actually see over 600% since this index has been put together. If I also want to look at just the Nasdaq 100 on its own, and I go back to the all-time high, you could actually see that the Nasdaq 100 has done very well, over 4,000%. So in essence, as an investor, you don't want to time the market. You don't want to actually have that predictive prowess or that predictive genius that when this is going to be over, when Trump is going to actually settle with all these countries. You want to actually invest over time, and you increase the tempo if you can, if you have the liquidity, when the market has priced to the downward part of the valuation. So that's just what is going on in the market. Nothing very, very spectacular. So if you are investing, keep investing. If you want to give up investing, by all means you can. But history has showed us time and time over that investing is not actually done when the real investing is not done when the market is very, very bullish. The real investing is done when the market is bearish, when people are fearful. That's the best time to become greedy, just like the great Warren Buffett said. So thank you so much for watching this episode. Thank you for being part of the channel, for being part of the entire programs that we've been bringing you. Tomorrow we will be going global. Once again, we talked about GT Bank, how they performed very well. I'll put that video. I'll link it to this video so that you can watch what GT Bank has done. We'll be talking about some other NGX quoted companies as well, and how they are performing, whether they are something you can actually look at as an investor or not. Thank you so much. Please subscribe to this channel, put your notification bell, give this video a like so that you can get to much more people. Follow us on Instagram as Talker Team Live, on TikTok as Talker Team, on X as Talker Team Live. Thank you so much. Till next time, tomorrow willingly or hopefully, keep investing and keep growing. Take care and bye bye.